Now let's get a look at the bigger picture. Patrick Mueller's with us, RFC President, Bella Advisors. Thank you for being here. Some of your thoughts on the current state of the markets. We've had a busy week. I'm sure next week will be busy too. Tell me a little bit about your thoughts here.
It sure will. Thanks for having me, Nicole. And we've seen a sideways market since late October, where we really have just seen, pretty much just go moving sideways since then. And we're in a trend right now, the latest bull market trend, and it's been going on 27 months, where the average trend is 18, 24 months. So in my opinion, we're on borrowed time here moving forward. And I think it's a really good time for people to start thinking about taking profits and taking some of those chips and taking them off of the table and repositioning into something that's not tied to the market so much. And you hear these kinds of phrases when markets are down, that it's only a paper loss, but we're close to all-time historic highs. It's only a paper gain, right? It's not until we can take some of those profits off of the table. But this year, I see it slowing down a little bit from the speed we've been on the last couple of years, 25+% returns over the last couple of years. So maybe we'll end up like around half of that. But I think with all the tariff talk and this new administration and all the changes they're going to be making, it's going to cause a lot of volatility. So people really need to be in store for that. And I think we're going to start seeing a retracement here in the near future, but we're paying close attention to it.
We were talking about the reciprocal tariffs that President Trump was alluding to. In fact, he said that they're going to have some sort of news conference next week where they'll lay it out more clearly. And it's sort of trying to equate the tariffs on countries in a reciprocal way. They too will have tariffs, right? And so the fact, just the talk, pushed the market down today. So when we get this news conference next week, when they lay it out pretty simple, it may hurt the markets, or no?
It very well could, because the markets are just so headline driven today. Somebody says this, the markets are up. Somebody says this, the markets are down. And so I would just think a little bit more longer term. We're just going to see a volatile ride throughout the course of this year. And I would just start focusing on things that maybe aren't going to get us hit as much with the tariffs. So maybe focusing on AI, maybe focusing on healthcare a little bit, focusing on utilities. With all the AI, the energy that is needed to maintain these AI facilities is crazy. And so we're in Atlanta, and we're like the Silicon Valley of the South, and there's these huge data centers just popping up all over the place. And so I think people need to focus on things that aren't going to be affected so much by the tariffs, because it's going to cause some volatility for sure.
So with AI, I mean, just to be clear, are there some AI stocks that you do like, and tech? Because I do want to get to financials and healthcare and some of the other areas that you may think are a little better plays here, maybe less volatile. But when it comes to tech and AI, do you hold some of that? Do you like some names in there?
For sure. I mean, some of the big players that we hear about a lot, I think, NVIDIA's at a discount right now. It's got beaten up a little bit, right? And, here in the last couple of weeks, but it's going to do just fine long term. Microsoft is going to be a big player. And then things like semiconductors. Van Eck, we like that ETF a lot because it's got good semiconductor players that are in there. And, we're going to need more of that as we move forward, I think. Those different sectors are going to continue to do very well. They're definitely have our projection of the biggest growth potential for this year.
Yeah, I didn't hear what the ETF was that you liked. What was the ETF that you liked?
Van Eck.
Oh, okay, of the semis. Got it. Tell me about financials, healthcare, industrials. Do you feel like these are less of, financials and healthcare especially, maybe not industrials, but when you think about tariffs or rates, maybe these are somewhat more foolproof?
Yeah, so when it comes to healthcare, it underperformed last year, and that could be something to watch out for this year. So companies like Pfizer and Johnson & Johnson and the earnings coming out and starting to make a recovery from, not that they did terrible last year, right? But not as performing as a lot of the other sectors did for last year. And then as far as the industrials, when we have, companies coming in from overseas, I think we're going to see that doing well, even though we have all this tariff talk. I think that could be doing well also.
Gold hit a high, by the way, again, 29.10. And I think you have liked gold. Have you been buying more, and why?
Yeah, well, gold is always a good hedge. I think everybody should be owning a little bit of gold and also probably a little bit of silver with all of the solar panels and energy, and it's going to need a lot of that silver as well. But gold, our analysts, we think that could keep going on up to $3,200. And so we like it, and I think it's a good hedge, especially as things get more fearful in the markets when it comes to like all the tariff talk and the changes that this new administration can make. I think it's a good place. And I told my wife that we need to own more physical gold, and she agreed with that completely. And she was like, just make sure it's the kind I can wear. And so...
I agree with her. That's not a bad idea. And when we think about some of the other areas, financials, so gold's been hitting highs, but you definitely still see more upside potential. You mentioned even 3,200, when you're at 2,900, right? How about financials? Because you are seeing names like J.P. Morgan, Wells Fargo, I think Goldman Sachs, new highs for all these names.
Well, it's a lot of stability in the markets with interest rates staying where they are and the Fed not being very aggressive and lowering interest rates this year. I mean, you got the Treasury, around 4.5%, fluctuating around there. And so that's really good for banks. So they've got, higher margins. And so it creates a lot of stability. And so I think we're going to see a lot more of that this year. And, I think that's going to, lead to the lowered regulations that I think we'll probably see with the banks moving forward. We're going to start seeing a lot more IPOs in the markets, which we really haven't seen a ton of in the last few years.
Yeah, and just quickly, the infrastructure and industrials, you think reshoring, all of that is good for industrials, right?
Absolutely. I mean, let's bring jobs back into the country. I mean, you had, companies from Canada recently saying that they're wanting to move their facilities into the country. So with these tariffs, I mean, I think it's going to be a pro move for the country where maybe we'll actually have a lot more manufactured and we can start seeing made in the USA and a lot more places as we move forward. But I think that's going to be very good long term. All the moves that are being made right now. And I think a lot of the tariff talk, it's just a good negotiating tactic, as you can see, like Mexico backing down and Canada backing down and Colombia and all of that. Trump just understands the power that the U.S. has, and he's definitely using that as leverage moving forward.
Thank you. It's good to see you. Patrick Mueller, RFC and President Bella Advisors. Thank you, Patrick. Coming up next.